Welcome to the next video in our Why series. Why series is an initiative where we have tried to address those topics which will help corporate executives to understand why they do what they do. Hi, I'm Saujanya and I coach corporate executives and business owners to understand finance in the most practical way. This initiative is a response to the kind of feedback we got from the business unit heads and the controllers who always felt that their team members know what they do, but they seldom understand why they do what they do. I hope you enjoy the series. Let's come back to the topic. The topic of today's video is why is the accounting equation a popular concept to understand? Trust me, it's a very popular concept because accounting is always understood by students who take commerce as a part of their stream in their academics in a very different way. Accounting by a commerce student is understood by a certain set of rules, like debit what comes in, credit what goes out. Trust me, a student who has not taken commerce as a part of a stream in the academics does not understand these rules. But can a non-commerce student understand finance? Yes, in a very effective way. For that, accounting equation is supposed to be a very popular method, especially if a person has academic background with science subjects. That particular corporate executive who wants to understand accounts would enjoy the concept of accounting equation because it has LHS and RHS, means left hand side and right hand side. Let me take you through the concepts through this video. Accounting equation, as the name suggests, has an equation. What does it mean? It talks about a relationship between application of funds, also called as assets, and liabilities and owner's equity, which are also called as sources of funds, and in an equation format. So if this is a relationship between two aspects, what that equation would look like? There's a formula, or the equation would look like assets is equal to liabilities plus equity. If you notice, assets on the left hand side of the equation is the application of funds or uses of funds, whereas on the right hand side we have liabilities, which are known as external sources of funds, plus equity, which is internal sources of funds, something which the promoter or the owner pumps into the business when the business is initiated. What does this left hand side and right hand side indicate? It indicates a dual effect of accounting. If the business is trying to source an resource in the form of an asset like a furniture or a computer, the business has to forego one resource like cash balance or bank balance to get another resource like a computer. So this has a dual effect of a resource being spent to acquire another resource. Or if the company or the business is not spending in terms of payment of cash or payment through a bank mode, then the business has to recognize the obligation to pay in future. So there's a resource which is bought by the business in exchange of an obligation which is going to be recognized in the books of accounts by the business. This is known as the dual effect of accounting. This is also popularly called as the debit and the credit effect. Let's not get into the debit and the credit terms, but this dual effect of accounting is beautifully and in a very simple way captured in the accounting equation. Next, what does it represent? It represents that the assets are financed through the liabilities and equity, which is why I was using the terms assets as application of funds or uses of funds, and liabilities and equity are the sources of funds. Next, this particular equation is always at balance after every transaction. This is nothing but the financial position represented by a popular statement called the balance sheet. Such kind of a balance sheet prepared by the business is always showing the position of the assets versus the liabilities on a particular date, maybe at the year end, as on 31st of March or 31st of December, or at the end of the month or end of the quarter or end of the week, whenever the business wants to understand the financial position. Such financial position is on a particular time frame, not for a range. This is the part 1 of the series where we're going to discuss the accounting equation. In part 2, we're going to understand more about the equation in terms of the left hand side and the right hand side, what the other next level components which we can understand to be comfortable to understand the dual effect of accounting. We will definitely discuss all of this in our part 2 series. I hope you've enjoyed this video, and if you have enjoyed this, please do share it with all of those friends whom you know who have not taken commerce as a part of their curriculum, but they are eager to understand finance either out of interest or as a part of their necessity. This accounting equation is quite a popular concept among the non-commerce students and very effective to understand the impact of any transaction on the financial position. Trust me, the kind of clarity this gives is so good that with this a journal entry or recording the transaction in the rules framed in the accounting domain is possible. And this is also the smartest and the quickest way to understand the implication of business decisions. I hope the introduction to this accounting equation was useful. If you have liked it, please do like, share and comment about this video. To take a recap, we were discussing on the concept of the accounting equation, which is a very popular concept. This accounting equation has a left-hand side and the right-hand side, and very popular among students who have not taken commerce as a part of their academic choices. Assets is represented on the left-hand side, liabilities and equity is represented on the right-hand side. This means liabilities and equity are the sources through which the business gets funds, and those funds are invested in the form of assets. Of course, the liability can be long-term or short-term, and the application of funds also can be for a long term or short term. This equation would also record the transaction with the dual effect, which is the requirement of an accounting. And this is nothing but the balance sheet position, which is represented by business in the statement called as balance sheet at a particular point of time. I hope you've enjoyed this video. Do watch and understand the part 2 of it, where we're going to be discussing the further breakdown of this equation, which will help you to compare to the balance sheet, which is the statement represented by the business. See you in our next video series.